Hi, everybody. Welcome back. Um, so I hope you had both worked on the problem. I also had an opportunity with some personal interaction there. And problem 3.3b is a problem on adjusting journal entries. We're not going to prepare any financial statements, but here I have kind of, while I was waiting for you, I drafted some of the selected T accounts. So what are there's like five adjusting entries you got to make. First, adjusting entry relates to supply on hand. Supplies are, of course, is an asset account, right? Right here, it's an asset account. But what happens with supplies, you use them up over time. So, as you take stuff out of your supplies drawer, you use it up. So in the end of the period, you have to look up how much you have left. So according to this one, you only have left $1,380. So you need to bring it down from 7,200 to 1,380. Let's see, how much is that? Plus 7,200 minus 1,380. So you need to credit at 5820, right? To bring the supplies down. I'm gonna you can put it as a supplies expense, as a separate supplies expense, or you can put it in the miscellaneous. It doesn't really matter. I'm gonna put it as a separate supplies expense. So you need to that's 5820, so you need to debit it. Okay. Right. So that's the first adjusting entry here. Then you have fees earned but unbilled were 3,900. So that basically means that they provided some services but didn't bill for them. So they need an account. We have an accounts receivable account here. And it's as a starting balance according to your to the book of $72,600. However, you also had unbilled fees, and those were additional 3,900. So you need to debit accounts receivable for that, and you need to add it more to fees. It's another credit of 3,900. Right? Those are the journal entries. That's the second journal entry. The third journal entry has to do with depreciation. Depreciation of equipment was estimated to be 3,000 for the year. So that simply is, there is no other depreciation account. So you need to debit depreciation 3,000. And they have an equipment account that has a starting balance of 112,000. This is a net account of accumulated depreciation, so there's no separate accumulated depreciation. So it's not technically incorrect, but for brevity purposes, I'm sorry, this wasn't 112. It is 112. Sorry, it's 112. So you need to credit equipment 3,000. That's really credit to accumulated depreciation. Unpaid wages accrued for worth 2,475. So you don't have right now an accrued wages account, so that's a liability account. So you need to credit that for 2,475, and you need to credit debit. I'm sorry, wages, which is here 2,475. The same thing. Sorry about that. So you can call it wages payable. Thank you. And finally, balance of unearned fees represented receipt of advanced services to be provided. Only 14,140 was provided between April 1st and 30th. So you need to recognize what was provided as revenue. So the starting balance in unearned fees was let's see, was 19,200, and so some of that, let me make sure I read it right. And some of that 14,140 of that was provided. So you need to debit it, and you need to again then credit fees, which is a revenue account, 10,140. Okay, so those are the adjusting entries you should have made. Parts 2, 3, and 4 you can do on your own. I mean, there's actually in the solution, the original revenue accounts I mean, the original income statement accounts were, this is the revenue account right here. So let's write that out. I'm not going to calculate the net effect, but just as an exercise. So before